Hello and welcome to this Thursday's morning market briefing. We've got a lot to talk about, but firstly, Benjamin Netanyahu rejects what he calls a delusional Hamas terms for hostage deal, as well as that Uber records first annual profits as market value approaches $150 billion. We've got lots to talk about in the charts. Also, we have lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around to see that. Before we get straight into it, make sure to subscribe. The first article to talk about, of course, is to do with Benjamin Netanyahu and the issues to do with the Hamas proposal. Now, Netanyahu yesterday rejected new conditions set by Hamas for a hostage release deal. This came during a press conference yesterday with Netanyahu promising total victory against Hamas. Now, of course, we've been following this kind of engagement, this conflict, since October the 7th, when, of course, Hamas did storm Israeli territory and massacre thousands of civilians. Since then, of course, we have seen, the IDF take part in a kind of air, ground and sea operation into the Gaza Strip. And currently, the IDF do hold much of the territory within the Gaza Strip, and as a result has caused, a great deal of humanitarian issues as well as deaths, and that has caused a great deal of international condemnation as well. So ultimately, this has been a key focal point of geopolitics within the last few months and has drawn in many different nations for many different reasons. Just for example, we can think of the UK and US that have been recently striking Houthi targets in Yemen, as well as, the US, which recently had 3 of their own soldiers die in a Jordanian base, not a Jordanian base, but a US base in Jordan, following a kind of terrorist attack or, a militia attack in Iraq. So, some very serious situations that we're talking about here. And ultimately, the reason why we are always talking about it is because it greatly affects markets and pushes certain assets one way or the other, with world tensions being, a key part of markets. Ultimately, if investors are very, relaxed about the way the world is going, world peace is, on the rise, or, is clear within the West, ultimately we're going to start seeing, a lot less volatility in US equities, let's say, should, all other variables remain the same, as ultimately investors are less likely to be spooked by maybe the US being brought into a war, or the UK being brought into the war, the EU being brought into a war. Ultimately, because if those nations are brought into wars, we're talking about large scale conflicts, we're talking about large amounts of deaths, we're talking about a large deal of government spending by such governments, and as a result, a great deal of effects on certain US equities. Not only that, but these sorts of conflicts also do affect certain defense stocks such as Lockheed Martin. I'm not sure whether Lockheed Martin is public, but other defense stocks as well, as ultimately, this is a game of like profit and making money for certain companies, as they do sell their arms contracts to many of these nations. And so when we're talking about world tensions, that's also something that we should always keep in mind. But ultimately, this is important because it is affecting certain assets greatly just based on world tensions. I mean, I know I've spoken about US equities, but ultimately gold is a very important one to talk about. Not only have we seen, gold rise exponentially, gold rise exponentially during COVID as a result of, the tensions around that, but also we saw it rise greatly following Russia's invasion into Ukraine. And this is because gold is a safe haven asset. If people know war is coming, if they know there's a greater chance of, the dollar or the pound or the euro collapsing as a result of war, or even some sovereign territory being taken by another nation, ultimately people start buying up gold, as, they're then able to exchange that freely without the worry of whether, that currency loses its backing or anything like that. And that's why, this is so key to talk about, as it's very, very likely, well, not very likely necessarily, but, the chance is always there that the US or another Western ally does get brought into this war somehow through a regional conflict, let's say in Yemen or Iraq and Syria or Jordan And that's why, it's so important to understand. Not only that, but this war has been greatly affecting the oil markets, of course, with, the recent attacks by the Houthis on merchant vessels within the Red Sea and Gulf of Aden, causing oil prices to skyrocket, as ultimately it's completely messed up the oil shipment process through those areas, and as a result, shipments are taking longer, and therefore oil is becoming scarcer for certain nations, driving up prices. That's why this is once again so important to keep your eyes on. But more on the topic of the actual deal that was been proposed, the conditions set by Hamas, according to Netanyahu, would lead to another massacre, and that massacre being, of course, the October the 7th massacre. Now, Netanyahu instead wants to continue the IDF offensive into Gaza to achieve total victory over Hamas, saying we won't settle for less, with Netanyahu adding that military action will allow for the release of 130 hostages held by Hamas, with his recent meeting with the US Secretary of State Antony Blinken saying that if Hamas is toppled in Gaza, that after Hamas is toppled in Gaza, Gaza will be demilitarized forever. And this has been a key point of certain far-right members of Netanyahu's coalition government, is to completely demilitarize the Gaza Strip, and not go for any of these hostage deals, but instead focus on the military action as a way to bring home these hostages, or even at the cost maybe of these hostages, win the war against Hamas. Now, Antony Blinken has been clear, however, on the fact that a hostage deal is the best option for peace, with him recently saying that he was intensely looking at the Hamas proposal, but also made the important comment that there will still be a great deal of work needed for the deal to work. The Hamas proposal in question asked for a ceasefire lasting 4.5 months, as well as the release of 1,500 Palestinian prisoners and a withdrawal of the IDF from Gaza. This proposal came following a framework agreement set up by officials from the US, Egypt, Qatar and Israel, and was designed to enable the release of hostages in Paris. So I may have worded that incorrectly, but ultimately the framework was set up within Paris with those officials, and of course they're in reference to the Gaza Strip and Israel. Now, this framework, however, proposed a 6-week pause in hostilities, whilst Hamas instead proposed a 135-day pause in fighting. So far, only 110 of the 250 hostages taken by Hamas has been released, and the IDF has since killed tens of thousands of people in Gaza, according to the Hamas authorities. So this is very important to keep your eyes on, and is definitely affecting world tensions a lot, so make sure you keep your eyes on this. Next article to talk about, though, is to do with Uber, as Uber has recently recorded its first annual profits, and as a result the market value of Uber is skyrocketing. Now, Uber has recorded their first year of profits being made. This marks a turning point in the financials of Uber and has sent share prices to highs. Now, of course, we haven't spoken about Uber too much, but I think this is very important to kind of talk about, ultimately because it's once again another tech stock, certainly some would say a tech stock, which, has, dealt with a great deal of issues during COVID and coming out of COVID especially, but since then has been able to recover greatly and is now on trajectory, to be one of the most powerful stocks really, out of the tech group really, and it's kind of a more new face amongst the tech group, as though whilst of course Uber's been a well-known stock since maybe 2014, ultimately I believe 2014 was when people started talking about it. I'm not sure, but ultimately Uber is an important stock to keep your eyes on, used by many individuals, of course, probably used by many of you watching the video, and as a result it's always important to kind of keep your eyes on these individual stocks, to understand how that might affect the wider markets as a whole, but also individual stock investments are also a very important thing to keep your eyes out for, and maybe even kind of indulge in. So this is why it's so important to kind of talk about. Now, the earnings release was a surprise to analysts, and a strong demand for its services, as well as their strong advertising business, allowed Uber to make gains for the first time. And I think it's very interesting to see how these tech stocks have, of course, generated losses since their inception, massive losses, especially in the case of Uber, but go on to then start, generating profits 6 years, 7 years, 8 years down the line, and also the while, their stock value is insanely high because projections are projecting a great deal of profits in the future, and as a result, that's what we kind of see now. For example, Uber profited $1.1 billion in 2023, whilst it lost $1.8 billion in 2022, with a net profit of $1.9 billion for 2023, compared with a $9.1 billion loss in 2022 net. So, very large losses in 2022. But in comparison, we're now seeing a very large gain for Uber in 2023. And obviously, many investors will now be looking at that and kind of looking forward to 2024 and looking at how this might, set the way that Uber does move, or, what sort of profits are then seen in 2024, with many analysts probably now already factoring that into their spreadsheets and projections as a result. Now, the CEO of Uber has since celebrated the results, saying that it proved Uber could go on and continue generating strong profitable growth at scale. The earnings release drove Uber's sales 1% higher, and this follows strong performance over the past 12 months already, with Uber now having a market cap of nearly $150 billion. When Uber initially had its IPO, it failed to meet expectations and delivered the worst first-day dollar loss for a debuting US company. I'm pronouncing that a bit wrong, but ultimately a very important topic, of course, to understand and keep your eyes on. Definitely keep your eyes on other tech stocks, though, as ultimately, as a result of macro conditions, of course, the markets are in a very interesting shape. So keep your eyes on all of that. That's all to talk about in the articles, though. Next to talk about, of course, is the charts, where we have a great deal of stuff happening. And to begin with, of course, we're talking about US indices, and to be more specific, the US 30, the Dow Jones, where we are seeing some action which is very important to keep note of. Now, as a quick kind of summary and, the usual kind of blabber on what's happened on the US 30 over recent months, ultimately, since the Fed did take a more dovish tone in regards to its outlook on monetary policy, we have seen since the US 30 move greatly to the upside. And this is because investors are starting to factor in those lower interest rates, which are favoring those US equities, as they're able to then get the lower borrowing costs and grow at a greater rate. As a result, we have seen US 30 move to the upside. That said, as we did enter the new year, at the start of January, we did really see a slowdown on the charts, as I've kind of drawn out here with the range, where we did see price kind of range around, not find its momentum to the upside or downside, and really struggle to find that liquidity needed. That said, after some interesting data on Thursday, on the 18th of January, we did start to see the US 30 begin its move to the upside. And since then, we have seen just a continual push and drive to the upside. Whilst we've retested those key areas of liquidity, we have ultimately made new highs very, very recently. But ultimately, within the last week, we have seen a retracement on the US 30, as I've noted here on Monday, where price did kind of bottom out on a retracement move. But as we've seen this move play out, we can now see that ultimately this was a retracement, as I've said, and price is now back on the move to the upside. That's so we haven't broken those all-time highs just yet, and those recent highs are still making that that area a great deal of resistance for price to move higher from. So definitely keep your eyes on the US 30, as whilst we are on the upswing, it's definitely important to keep note of the fact that we are currently sitting within this key area of liquidity and resistance, and therefore a sell-off is always there on our mind. So definitely keep your eyes on the US 30. Very important to note. Next to talk about, though, is the dollar. And we are seeing some very interesting things take place. Now, of course, the dollar rose greatly on Friday, on Monday and Friday, following, of course, the Fed's more hawkish data. Well, not the Fed, but the US's more hawkish kind of data, where we did see over 300,000 workers be added to payroll, and therefore we did see a great push to the upside for the dollar, as investors did start to factor in higher interest rates for longer for the dollar. Pardon me. And this is because ultimately, when you are seeing a great deal of jobs being added to payroll, you are expecting a greater deal of inflationary pressure. And as a result, you do see this move to the upside take place on something like the dollar, which is dependent, of course, on the interest rate set by the Fed. And if the interest rate is staying higher for longer, then ultimately investors are keeping a greater deal of them, gaining that interest for a longer period of time. And of course, this data pushed back even further those interest rate cut predictions. And whilst Fed officials have since kind of clarified that they are still expecting to cut rates this year, it has kind of muddied the waters for certain more optimistic investors in regards to cutting interest rates. So that's why we did see that push to the upside. That said, price did reach this key area of liquidity, and since then we have seen a sell-off from that area, and currently we've retraced to the 38.20. Of course, we noted out that 50% Fibonacci retracement level as a key zone which price could move away from. So definitely keep your eyes on the dollar, a very interesting level indeed. Next to talk about though is Euro USD, where there's not too much to say apart from the fact that we have now moved slowly away from this key area of liquidity on the downside of Euro USD. This is a price where this is an area where price has moved away from before, and basically we've created a double bottom just here. That said, we can't say it's time for a reversal on the Euro USD, and still we do have that sell side volume which is pushing Euro USD lower. So definitely keep your eyes on Euro USD nonetheless. Next to talk about though is Pound Yen. Pound Yen's been a key one to note recently due to the kind of interesting levels which it's been moving around in. Of course, price moved up to this key area of resistance and all-time highs, really. Well, not all-time, but yearly highs on Pound Yen not too long ago on the 19th of January. But since then, since reaching that level, price struggled to move higher. Price was encountering that resistance and kind of selling off and trying to push higher but failing, and ended up retracing from that level and reaching the 38.20 Fibonacci zone, which lined up with a key area of liquidity around the 185 level. And since then we've moved to the upside, but with not too much momentum really to note. So definitely keep your eyes on Pound Yen. It's currently just bounced off that short-term 61.80. So definitely look out for bullish movements. Next to talk about though is Bitcoin, where there's not too much to say apart from the fact that it has now pushed into this key area of liquidity on the upside. An interesting level to note, as of course Bitcoin has been encountering certain issues recently following the ETF approval by the SEC, which ended up actually causing a sell-off for Bitcoin as investors use this as an opportunity to get out. But since then we have seen a move to the upside following the liquidation of those trades. So definitely keep your eyes on Bitcoin. Next to talk about though is gold, which is always interesting to keep your eyes on as a result of world tensions and a lot of news with the Fed. And as a result of that, gold hasn't really found a move to a kind of momentum or clear direction to the upside or downside, and has really just continued to range around within these areas while spiking above and below as a result of volatility. But ultimately, world tensions and the Fed's kind of rhetoric and other key central banks' rhetoric is keeping gold where it is at the moment. So keep your eyes on gold. Next to talk about though is oil, where there's not too much to say apart from the fact that price has now pushed to the upside and is now nearing the 38.20 Fibonacci retracement level, which lines up with a key area of liquidity as well. So definitely keep your eyes on oil, as we could definitely see a continuation sell-off from that 38.20 in liquidity zone. Keep your eyes on that. That's all to talk about in the charts. So lastly to talk about, of course, is the economic calendar, where we aren't getting too much data today. But first off, we will be getting Chinese inflation rate figure, as well as the Spanish consumer confidence figure. And then following that, we're getting the US's continuing jobless claims figure, as well as the Bank of England, as well as a Bank of England official's speech, and finally some US data to note, with the US wholesale inventories figure being released, and finally numerous Fed officials obviously speaking today as well. So listen out for all of that and look out for all of that. We've covered lots on the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading day. That's all from us at Wildwood Capital. Have a great one. See you later. Bye.